for Rebecca Patterson. She's with the Council on Foreign Relations, has a shingle out at Vanguard as well. We're not going to ask her about ETFs and Bitcoin. I was going to ask her about the Swiss franc. Maybe we'll get to that. But here's the future, folks, seriously right now. The World Trade Organization lowers their economic growth forecast for this year, for next year. Some of these numbers are huge, huge moves. Rebecca Patterson, you're expert at this. I mean, this is the future that we're seeing right now this morning.
Yeah, I've been trying to find when is the last time we saw a dollar, bond, and stock sell-off in tandem that lasted for more than a few days. And I had to go back to my friend Mark Sobel, who is a longtime Treasury guy, now the chair of the U.S. at OMFIF, a think tank, 1977-78. Nice. So we haven't seen what we're living through right now in a very, very long time. And back then, what caused it was inflation expectations, lack of confidence in the Fed, lack of confidence in policy.
This is smart people like you taking the cacophony of news and lowering growth. In the zeitgeist, Rebecca Patterson, are we underestimating the decline in real GDP and nominal GDP from the Trump events?
The hard thing is you cannot have confidence in any view. And we saw that with United's dual outlooks, because we could get deals. We could have the whole tariff war go away tomorrow. Like literally, we could. And at the same time, we probably won't. The 10% universal tariff probably stays at a minimum, something on China at a minimum. Those two things alone would take the tariff level significantly higher than what we've seen in many decades. So I think looking for a major slowdown in growth against that backdrop is reasonable. The only good news, and I think the people who aren't looking for recessions yet, is that we were starting from such a strong place, right? Yeah. We had record household wealth at the end of last year. We had very little leverage on household balance sheets, corporate balance sheets, relatively speaking. So I think people who are saying slow down but no recession are looking at that and hopefully lots of deals. I'm a little more bearish. I think that we're probably looking at a minimum a mild recession later this year.
I'm just reading in a little bit more into this WTO news. They slash their global goods trade outlook. In its new forecast, the Geneva-based WTO expects the volume of world merchandise trade to decline by 0.2% in 2025, almost 3 percentage points lower than it would have been without the U.S.-led trade war. So
that's a major hit to global growth. I mean, basically what we have between the U.S. and China right now is a trade embargo. I mean, with a tariff rate at that level, we're effectively saying no trade. And the U.S. imports half of its consumer goods from China. So right now, inventories are getting built up. We're getting front loading, if you will, of inventories and spending. So we're going to see decent data for the next few months. But then we're going to have a Wile E. Coyote moment where tariffs come back in, the reprieve is over, the inventories are used, and we're going to be paying a lot more for shoes and clothes, and the consumer's going to get hit hard, I think.
So what do we do from an investor standpoint? I mean, you look at it, and I think the only thing I see is gold out there is kind of where the funds are flowing. But, a lot of stock folks are saying, hey, find the good companies, the good names and you can buy them cheaper here.
There is an argument for active stock selection right now with all the money in passive index funds where you're just getting in and out of a country or an entire sector. You are going to see some stocks that have better fundamentals than are priced. So I think that is one approach to this. I think leaning in on large caps and on consumer staples, so defensive areas. I think if you want overseas diversification, the UK looks like they may get a trade deal with the White House, and they tend to be a more defensive market overall. That might be another place I'd nibble at. You mentioned Switzerland, Tom. Normally, that's one of my go-tos for downside protection. But with the pharmaceutical tariffs, I'm not sure that one works as well this time.
We're going to stop the show because this is what she does. She triangulates the issues of the moment. Yesterday, we started in on antibiotics, pharmaceuticals. Somewhere between 80% or whatever of antibiotics come from China. There's a whole European drug trade as well. The media is way underplaying pharmaceuticals, aren't they? We're like Apple's sexy cell phone and all that. Those antibiotics we take for granted are really under threat.
I mean, my hope is that just with some of the exceptions we've seen in the last week, if supply chains become truly threatened later this year, we will see exceptions for pharmaceutical ingredients and actual pharmaceuticals, because there's no way the voting public is going to be okay if they can't get their meds.
On your commute this morning, good morning, Bloomberg 1130. The entire Patterson family is listening in. We say good morning on your commute across the nation on YouTube. Subscribe to Bloomberg podcast, I should say. Just thank you so much for that interest. Okay, because Rebecca was here, Paul, I had to go adult. Usually I go Euro Swissy, but I did dollar Swissy logarithmic.
No boy.
So you get some curvilinear move here. There I was on a street in Lausanne, Switzerland, bratty 15-year-old, and I was doing the math, 4.3 Swiss francs to a dollar. I can't figure it out. And I'm sorry, it's a linear decline, but with a new Trump acceleration to ever stronger Swiss. I got gold at $3,200 per ounce. What does that signal to you on the JP Morgan desk years ago?
I think there is a flight to safety, and the dollar right now is not seen as that. I think, or bonds for that matter, to the same degree they are normally. And then I think there also is an element of repatriation of foreign investors who had been loading the boat with U.S. assets for the last 18 or so years, taking some money home for economic concerns, political concerns, et cetera.
All right. So can central banks have an impact here on this global trade issue, a global economic issue? Think about just central banks in general, and we'll hear from the Fed soon.
Yeah, so we have Powell coming up. Cutting rates is hard if inflation rises or is sticky. So central banks, especially in that situation, will move slowly. So they won't come to the rescue that way. If the bond market freezes up, we could see stabilization measures like we saw in March 2020 or around SVB. So we could get financial stability help, but we might not get growth help as quickly as we like. One thing I'm watching today, guys, is the meeting between Trump and the Japanese trade delegation.
Yeah, that's right.
Bonds are coming up. Japan owns $1.1 trillion of US Treasuries. I just have to think they're going to have a little discussion about that. What can Japan do to help lower US financing costs? I don't know what Japan would want to do, but it wouldn't surprise me if that's a topic.
Rebecca Patterson, now with the Council on Foreign Relations and the website, folks, I can't say enough about it. And Foreign Affairs magazine just lights out. Lawrence Friedman in the new issue on war, truly an expert. Wonderful time with him years ago. And Adam Posen, everybody talking about his article of the last 3, 4, 5 days. So you don't know this, folks, but the cafeteria for the Council on Foreign Relations is Match on 65th Street.
Yep.
Everybody goes in there. You can sit there. It's like the number of PhDs at a lunch at Match, and excuse me, Paul, lunch at the CFR is not 12 noon. We're talking 1-ish, 1:15, yep. And they're in there at the wonderful Match on 65th Street. There's like 18 PhDs around a table. What are you and Froman talking about negotiation? She's laughing at me. About negotiation.
I know, I'm just saying I haven't been invited to Match. I'm like, I need to talk to Froman tonight.
Tell Froman and get over there and go to Match. But Rebecca, the issue here is there's this word negotiation, and the president I'm not being a critic of Trump. Don't give me grief, folks. But he's got in his mind his negotiation, and the Chinese are talking respect. I have no idea what the Japanese are talking about. Define the word negotiation at CFR.
Well, there's what we've seen traditionally, and then there's what we're living through now. I think what we're living through now, who knows what the number is, 70, 75 countries in 90 days. You have to do a deal every 30 hours or something. So that's not going to happen when they normally take quarters or years. I think our best hope is that we get a number of countries to sign, understandings of what will happen, the kind of beginning of a trade deal. And it's enough of global GDP, enough of U.S. trade to calm the markets, at least somewhat, that the worst case scenario is off the table. Japan would be a huge win. And I think from what we're hearing from the Japanese, they are hoping to do a deal. If we could see that come out later today, we'll have another relief rally. I don't know if it'll last. They want Japan to help pay more for the defense umbrella from the United States. They want a stronger yen. Well, the yen already strengthened 10% this year against the dollar. So I don't know what else they want. They want Japan to keep raising rates. They want something with bonds. What will that package look like? More access for U.S. farmers to Japanese markets, cars. But I do think Japan, Korea, Vietnam, there are a handful of countries that I think are relatively more likely to want deals. If the U.S. can get that done quickly, that will help, again, for the short term at least, stabilize things.
Would that be enough to keep the U.S. economy out of a recession?
I don't think so. Honestly, the 10% universal tariff, and even if Chinese tariffs don't stay where they are, if they stay high, we're still looking at an average tariff rate in the United States that's going to be the equivalent of a $1,000-$2,000 tax hike per each U.S. household. So I still think you have a pretty material hit. Brilliant
question, Paul. A headline just out, AMD sees up to 800 million charges from U.S. export controls on MI 308. The stock down 7%, seems to be a trend. We got to frame this. You failed there, Rebecca. If we have a 10% tariff, that's only 5 times bigger than what it was before. Maybe I'm wrong. It's 4 times.
Right.
But we need to explain to people, even if we get the best outcome, what it does to the real GDP spirit and confidence of America is. I'm going to use this is a word. Bessemer. I gave a speech once at Bessemer.
Yeah, sure.
I had to use it. I got put in the timeout chair. Mm-hmm. It's a ginormous move up to 10%.
It is, and we're seeing the uncertainty in the surveys. Now we're seeing the uncertainty coming from corporations. I think earnings guidance has to get pulled lower, growth expectations pulled lower. We're going to see it. We're starting to see it now bubble up in credit markets. So it's coming.
Well, to Paul's question on Powell today, take it over to the monetary space. We talked about a J curve with Risciuto. Do you suggest that this is, yes, inflation, but then it reverts on a real GDP slowdown or nominal GDP slowdown to some form of disinflation? That's what's really
and that
out
was
there.
Waller's comments, right? A few days ago, Governor Waller from the Fed said that he had 2 scenarios. Of course, we all have more than one scenario now, but he believes that the shock to demand from the tariffs could overwhelm the inflation and eventually lead us to enough disinflation that you could cut rates. That's possible. I think that's, if I get something wrong with my view, it's that the hit to demand pulls inflation down.